Hello, this is Matt on the Moon Lambo channel, and wow, this headline definitely caught Moon Lambo's attention here. Now, everybody knows the narrative that Bitcoin is equivalent to gold, or at least it's digital gold. Well, here's a headline from a brand spanking new piece from crypto media outlet Cointelegraph, and this one is titled, Digital Gold Label Shifts as XRP Correlation to Gold Outpaces Bitcoin. Well, how about that? I've also got a piece I want to share with you about a crypto company being forced by the SEC to return ICO funds to investors. Is something like that in store for Ripple and XRP after all of these years? We'll talk about it. But before we go any further, if you would please delicately tap that like button, and if you're a fan of Ripple and XRP and like the idea of this narrative of XRP as digital gold, if we could call it that, go ahead and subscribe to the Moon Lambo channel, the best channel on all of YouTube, damn it. And let's dig in. Up until the most recent correction, Bitcoin price was repeatedly pushing above $10,300 and attempting to reach a 2020 high above $9,500. Now, 2020 started with a strong upward trend, and altcoins followed Bitcoin's price action as thoroughly reported in Cointelegraph. And yes, certainly Bitcoin was leading the charge in many instances, but interestingly enough, it was altcoins as of late that have been increasing in dominance despite that. So Bitcoin doing well, but altcoins doing even better, including XRP year to date. Anyway, the piece continues. This aggregate trend leaves the door open for a full bullish period ahead, since the last Bitcoin high growth period was between April and June of 2019. The volatile behavior observed since the start of the year may be causing the traditional assumptions associated with Bitcoin and other top currencies to be challenged. Ooh, yes, tell me more. One of those assumptions is the belief that Bitcoin is closely connected to gold. Yes, those beautiful yellow rocks that Peter Schiff just loves to shill. They're so much fun. So here's the subheading: Cryptocurrencies and the Precious Metals Narrative. A previous analysis reported by Cointelegraph was shown that the digital gold narrative attributed to Bitcoin may not be as realistic as investors believe. The lack of a significant relationship between Bitcoin returns and gold returns, as well as the low correlations across the years, are contributing to the challenge to the narrative. The same can be said about the association between Litecoin and digital silver, as they call it. The critical analysis of the relationships between cryptocurrencies and precious metals opens the door for further research. And this is a conversation that's been going on for some time, not just with Bitcoin, but really for the entire crypto asset class. And it's quite similar conceptually to the idea of it's really the same thing, just the idea of cryptocurrency as a store of value. And it's frequently talked about in those terms. And some like to argue that because cryptocurrencies are extremely volatile, that they cannot be a store of value. And so it depends on how you want to define this. Are you going to define that particular metric and then set parameters with it so that, depending on how it performs, something can move into and out to a category known as, a store of value? Is that what you want to do? Because nobody's really mapped it out like that. What's the litmus test? And what's the entity that gets to decide what the litmus test is? Well, there is no entity that I'm aware of that is trying to shove that down anyone's throat. So really what it comes down to is a bunch of different opinions, and some people just feel that because cryptocurrencies as an asset class are particularly volatile, that they simply cannot be a store of value. I don't completely buy into that, because what about the stock market when it crashed? How far did it go down a decade ago in 08 and 09? That major portion of the crash was 40 or 50%, something to that effect. Well, that was freaking volatile, wouldn't you say? What about when gold, more than doubled in value after that particular crash? Well, that's can it be a store of value when it jumps up that high but then craters back down? So that's why when you get into this whole idea of something being classified as a store of value or digital gold, if you want to call it that, we're talking about cryptocurrencies. The concept of volatility making it impossible for it to be that, I conceptually disagree with that. I understand the point. Certainly, it's not a hard concept to understand, but I fundamentally say, I don't know about that. Because I think what's going to happen is as the asset class continues, you're going to see XRP and other cryptocurrencies, especially the ones that have staying power, and that's why I lead with XRP. And of course, this is an XRP-centric channel. I think that as you continue to see the asset class mature, it will stabilize over time. Now, by analyzing the correlations between the top 10 cryptocurrencies in the market and gold returns during January 2020, we unexpectedly found that XRP, rather than Bitcoin, has the strongest correlation to gold. Well, how about that? XRP is correlated at 34.1%, while Bitcoin is correlated at 21.5%. Moreover, both Ether and Bitcoin Cash share a very similar correlation to gold, as Bitcoin does, with 20.1% and 19% respectively. And of course, so this conversation, what they're talking about is the actual price action of XRP specifically to actual gold. But to me, when I'm talking about this, I'm also thinking about store of value. To me, it's the two topics go perfect together like lamb and tuna fish. Perhaps you prefer analogy, spaghetti and meatball. Now, in the opposite direction, Tether has an inverse correlation with gold at negative 37.7%. Now, this is surprising since the behavior of a stable coin like USDT could be more correlated with a precious metal like gold than a much volatile coin like Bitcoin. I should say much more volatile, but crypto, media, whatever, you don't have to have proper sentences. It's cool. You're good. You're getting a C+. A correlation of 100% means that each cryptocurrency and gold move completely in the same direction, while negative 100% correlation means they are inversely related. Or in simpler terms, when one goes up, the other goes down. A correlation of 0% means that each cryptocurrency and gold is not related in any way. Now, by looking at a wider time frame like 2019, the assumption that Bitcoin is more related to gold is sustained. Bitcoin is correlated at 15.5%, with gold for the entirety of 2019 being the most correlated currency with gold from the top 10. And so I tend to think, like I said, it just goes along with the whole concept I was stating in terms of store value also, and same for correlation with gold. I think that as you see the maturation of the asset class and the frenzy around the price action with crypto, as it dies down and seeks, becomes whatever normal is for that, we'll be able to see that this flip-flopping back and forth in terms of which cryptocurrency is most correlated. The flip-flopping back and forth will more or less end. Maybe there'll be a handful of top coins that will behave more or less the same. But the market just hasn't figured this out. And so we don't know ultimately what this is going to look like if we were to fast forward 10 years, but it is fascinating to look at and study nonetheless. Now, as seen before, Bitcoin Cash is the second most correlated currency, with Bitcoin at 8.2%, followed by Bitcoin SV at 7.3%. For the entirety of 2019, XRP is less correlated, at 7.1% with gold than in 2020, challenging the idea that a stronger correlation can be sustained over a long-term period. And again, so that's why I was stating exactly what I was talking about there. It's going to flip-flop back and forth, and the market's going to figure this out, and either it's going to be correlated or it's not. And it's more or less going to stay that way, but not in its nascency here. Then they have this other subheading here: outstanding cumulative return since the start of the year. The start of 2020 witnessed the start of a strong positive trend. If an investor bought any of the top 10 cryptocurrencies between January 1st, 2020 and February 9th, 2020, they would be looking at a cumulative return of at least 134% when Tether is excluded from the analysis. From the top 9 currencies, Bitcoin produced the least profit, shifting one's emphasis to the possible altcoin bull run ahead. And so I find data like this fascinating anyway. And here's how they wrap it up, because I don't want to go through everything here, but here's the last subheading here. Which is digital gold, XRP, or Bitcoin? A recent report from Coinbase suggests that Bitcoin will come closer to becoming digital gold due to underlying features of the network which are similar to the ones shared by gold, as the scarcity of the asset aligns with the assumed bullish period ahead. Well, I'll tell you what. If you're a Bitcoin maxi, you better hope that's the case, because tell you what, Bitcoin doesn't do a damn thing else. It's technology in search of a use case. It frankly is. And then they wrap up stating, however, the results also show that since the start of the year, XRP has been the cryptocurrency most correlated to gold, and Bitcoin follows in second place. And as we move further into 2020, the relationship between gold and Bitcoin may come closer to one observed throughout 2019, when the digital asset was the most correlated coin to gold. And that may very well happen, but nonetheless, it's so funny to see narratives like this flip-flop back and forth. Take a look at this from Bitcoinist.com. SEC forces crypto company to return ICO funds to investors. Now, this didn't happen to Ripple, did it? No, it didn't. The U.S. Securities and Exchange Commission, SEC, has ruled that startup Enigma MPC violated federal securities laws when it conducted the ENG token ICO. The company must refund investors and pay a fine. The ICO took place in November 2017 and raised approximately $45 million. ENG is an Ethereum token that, like many, quickly saw its value skyrocket only to decline quickly within weeks. The SEC press release, the agency states that a company must establish a process by which customers can receive compensation. Now, John T. Dugan, Associate Director for Enforcement in the SEC's Boston Regional Office, said, quote, all investors are entitled to receive certain information from issuers in connection with a securities offering, whether it involves more traditional assets or novel ones. The remedies in today's order provide ICO investors with an opportunity to obtain compensation and provide investors with the information to which they are entitled as they make investment decisions. And so I wanted to at least briefly highlight this because don't you think it would be super duper weird if something like this happens? The SEC declares this particular cryptocurrency to be a security in very short order, just a couple years after this thing launched, while XRP, much more in the limelight in the world of crypto, has been around for 7 years, and SEC has raised no beef with it. What do you think is likely? I think I know how this all ends. But that's all for this video. Thanks for stopping by. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!